Hello everyone. It's January time, and we're all pretty busy giving our IT declaration proofs to the HR department of our organizations. Uh, Even though we do a lot of declaration, try to save as much money as possible, but very few of us know how these thing really works, right? So I'll try to in this video I'll try to explain how HR exemption works. Now everyone, literally everyone, we try to save some money from the HRA. And reduce our taxable income. So taxable income, help you explain what is taxable income. So taxable income is nothing but the income on which your tax will be deducted. Okay. Now, for example, let's suppose if you have a CTC and you're not giving any proof of your IT declaration. So as per the slab, if you're above 5 lakhs, your basic income tax would deduct, right? That's your taxable income. But let's assume that you're showing some investment proofs. Like for example, you're showing proofs on ATC. So on ATC, you can save 1.5 lakhs, which essentially means you're not going to save 1.5 lakhs worth of taxes, but your taxable income is going to be reduced by 1.5 lakhs. Now, if your taxable income gets reduced, obviously your tax gets reduced. Many people think that through ATC reduction we can actually save 1.5 lakhs worth of taxes, which is actually wrong, right? So if you're falling in the 30% slab, through 1.5 lakh investments, you can somewhat save around 46 to 47,000 worth of money, okay, from your taxes. Now let's come to HR exemption. Now ATC is obviously one of the method wherein you can reduce your taxable income. HRA exemption is also one such method wherein you can reduce your taxable income. So you have to show that you are living in a rented property and you're paying rent to your landlord. We all know that if you can, for rent below 1 lakh per annum, you don't have to submit any PAN card proof of your landlord. However, if you're paying rent above 1 lakh, you have to even share the PAN card details of your landlord. Okay. So essentially everyone, like most of us at least, if we don't have the PAN card of our landlord, we try to show the rent of 8333, right? It's a very common number. Okay. So through this video, I'll show you the calculation of HRA exemption. So let's just assume that your basic salary is 35,000 per month and yearly it's 4.2 lakhs. And let's suppose your HRA is 15,000, which is 1.8 lakhs per annum. As of now, this 1.8 lakh, if you see in red column, this is your taxable HRA, right? Because you're not showing any proof. But let's assume that you are showing proof of 8333, and that's essentially almost 1 lakh per annum. Now, there are three calculations that you have to do. The first is 50% of the basic. I'll tell you why we're doing 50% of the basic. Let's just do it 50% of the basic. This is 17,500, which is essentially 2.1 lakhs per annum. Now, income tax department have divided the cities into two categories. One is the metro city and the second is the non-metro city. For metro city, you have to calculate the 50% of the basic. Metro cities are like cities like Delhi, Mumbai, uh, uh, Hyderabad, and non-metro cities are anything apart from those metro cities. Okay, so for non-metro cities, you have to do this 40% of the basic. I'll do that for non-metro cities as well, but for now, let's just focus on metro city. Let's just assume that you're sitting in Delhi and you're paying 8333 rent. So 50% of the basic is 17.5 thousand, which is essentially 2.1 lakhs per annum. Then there's another calculation which is 10% of the basic. Okay, let's just do that as well. So your 10% of the basic is 3,500, which is 42,000 per annum. Now there's another calculation that you have to do is, which is essentially very important, which is rent minus 10% basic. So I'll do is rent, which is 8,333 minus 10% basic. This will come out to be 48,333, which is 57,996. Now forget about these two right now. I'll just delete it for now. Okay. Now you have to focus on three values. One is the HRA. Okay. The second is 50% of the basic, and the third is rent minus 10% basic. Okay. Once you do this calculation, just focus on these three values. So your HRA exemption will be the lowest out of all of them. In this case, the lowest is 57,996. So let me just write whatever I've written. I'll just first compare these two. Okay, So just done the calculation, I've just used if formulas to pick up the lowest value. And in this case, the HRA exemption is 57,996. Now your taxable HRA, which is this, gets reduced. So you just subtract 57,996 from 1.8 lakhs, which is essentially 1.22 lakhs. Now your taxable income gets reduced by almost 58,000, which is this amount. Okay, so this is how you calculate your HRA exemption. It's not like if you're showing the rent, let's suppose you're showing 8333 rent, and which is you're paying 1 lakh rent, your taxable incomes get reduced by 1 lakh. No, this is a very common misconception among everyone. We think that our taxable income gets reduced by 1 lakh. Your taxable income does not get reduced by 1 lakh, it gets reduced by 57,996. So you have to do these three calculations: 57% of the basic, 10% of the basic, rent minus 10% of the basic, and then you get your HR exemption. Let's suppose you're living in a non-metro cities. Okay, so I'll do that 40% of the basic. Now everything else remains the same. The taxable your rent minus 10% basic remains the same, right? So this is now this 40% of the basic actually helps when you are getting a very high package and you're living in a very high rented flat. In those cases, your rent actually exceeds a big amount, right? Once your rent exceeds your rent minus 10% basic is a very huge amount. It's actually very higher than your 40% of the basic. Okay, so this is essentially how you calculate your HR exemption. Next time when you are planning to save on rent, try to do this calculation. It will help you get the exact number. I hope I made some sense from this video. Tried to make it as simple as possible. I hope it helps. Please share it with your friends to help them understand as well. Thank you very much.